JC, it's interesting to me that you said it's a bull market so emphatically. And I said it because I don't feel like I hear that from a lot of people. I hear there's concerns about recession, stagflation, and everything's based on whether the Fed will or will not cut, the BOC as well. We had hotter inflation than expected here in Canada yesterday. But you're pretty convinced it's a bull market. Tell me why.
Well, in bull market, stocks go up, Catherine, and they go up for a prolonged period of time, and you get sector rotation, and there's a lot more people celebrating and having parties, and the parties are better, right? That's just what bull markets are like.
That's true.
In bear markets, what happens? You have a lot of stocks going down in bear markets. You have more and more sectors participating to the downside in bear markets. People aren't having as much fun. Parties are less frequent, and a cash bar at a dive bar instead of all you could eat sushi uptown. You know what I mean? Like, it's just a different
Yeah.
environment. And it's quite obvious when you look around, and then go back and study every bull market over the last 100 years. Go back, study all of them. You know what you're going to find? You're going to find that technology is a leader in pretty much every single one. With very few exceptions, technology is an outperformer and a leader in every single bull market. This time is no different. So the fact that technology is a leader, not only is that not a bad thing, that's perfectly consistent with pretty much every bull market over the last 100 years. Now, what you also see is the sector rotation. So consumer discretionary has been a big laggard. It came into last week down for the year. And when you look at the consumer discretionary chart that I sent you, you see the equally weighted version, you see small cap consumer discretionary, just a big nothing burger in the middle of a bull market. Now, in bull markets, does something as important as the consumer discretionary space roll over and complete massive tops and start to crash? Does that happen in bull markets? No. You tend to get that rotation after weakness in consumer discretionary within a bull market. The consumer discretionary stocks, by definition, where consumers spend discretionary income, is obviously like an offensive sector. That those are equities that tend to do well in healthy market environments. Amazon, however, is flat over the last 4 years. Amazon's 25% of the consumer discretionary. Tesla's down, has lost 60%. It's done a 60% retracement of the entire rally off the 2019 lows. Remember, Tesla went from 30 billion to almost 1.3 trillion in value in a little over 2 years. So a couple of years of digestion after that, I would argue, is very well deserved. And they've done that. So, and that represents 14, 15% of consumer discretionary. So, and now you're seeing that rotation into home builders who have shown a ton of relative strength over the last several years, a leader, not just within discretionary, but in the market overall, a market leader. Home construction, a key segment of consumer discretionary. So that's your leadership group. And if you get the rotation, Amazon, by the way, closed last Friday at the highest weekly close of all time. And when you look at the other mega caps like Meta, Google, Apple, Microsoft, Nvidia, when all these names got back to those former cycles highs from 2, 3, 4 years ago, 2021, 22, when all of these mega caps got there, what did they do? They consolidated and they all broke out one by one. You're going to bet that Amazon is not going to do what all those others did? I'm going to bet that it is. And if it does, and you get rotation to Tesla, consumer discretionary is your new leader. Voila.
Okay, interesting. So, two follow-up questions. With respect to tech being the leading sector, having been the leading sector, and potentially rotation into consumer discretionary, what does that mean for tech stocks? Because they have been such high performers, and there's a real debate now as to whether or not they can continue that momentum. Are you seeing the momentum?
Well, the strength, I think, gets overstated because the strength is concentrated in a lot of the mega cap names, and even outside of technology. When you look at Google, when you look at Meta, that are not, technology stocks, that's where the strength has really, really been and gets a lot of attention. But let's remember that small cap technology had a 14% correction this year. That's a lot, right? When you look at software stocks have gotten clobbered, right? So you've seen weakness in technology and rotation underneath the surface, but it's, it doesn't make the headlines because semiconductors are doing so great, and Nvidia is the biggest company in the world, and all that is great. But there's a lot of other stuff going on in technology too, which I think gets forgotten about. So I wouldn't overstate the strength that we've seen, and quite the opposite. I would expect rotation and a lot more strength. Quite the, right?
Okay, yeah. Well, that's fair, but then the question also then becomes, are you seeing weakness in Nvidia? I mean, we did just see that the other day, but would you expect that to continue, or do they get renewed momentum? We've only got 10 seconds left.
Yeah, I mean, listen, it's hit some short-term targets. We've clearly had some reversals. You're looking for a consolidation. I don't know how long it lasts, but when it starts to make new all-time highs, we'll probably be buyers again.
Okay, quick break. We'll be right back.